Expanding to Cosmos allows to essentially control the full stack and design a full suite of software, which is kind of a Formula One for trading. So today, dYdX distributes 100% of its fees in USDCs, and that's a very big revamp and upgrade of the token economy. That's okay. Dosé, Dahasi, wherever I go, it's I'm like, okay, just call me Charles, call me whatever.
Charles
nice to meet you. Well, I don't take it too seriously.
Well, appreciate you taking the time to join the program. CEO of dYdX Foundation. Ladies and gentlemen, welcome back to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and we have a very exciting episode of the show for you today. We're going to be diving into what's the latest at dYdX. They just made a big move recently to build on their own chain, and kind of just the history or the overview of the landscape of derivatives and how we will move into a more decentralized future. But maybe we can start with your background, Charles, coming from Consensus and then to dYdX Foundation. What have you been sort of prioritizing at the foundation to help build the broader dYdX ecosystem? And just give us a little bit of a rundown of your sort of role.
Absolutely. So before joining dYdX, as you mentioned, I was with Consensus as head of Asia. So I've been helping products such as MetaMask, Infura, and some other products from the Consensus suite to expand and grow ecosystem. Before joining Consensus, I was also with the Hong Kong government as head of fintech. So building ecosystem is something I've been doing for quite some years. At dYdX, there is an existing ecosystem historically from the historical version of dYdX built in 2018 by Antonio Giuliano. But with the birth of the new dYdX chain, essentially it's hundreds of contributors and people which are co-building this ecosystem. So think of validators for the chain, think of grantees, people doing research, risk management, and many other very important tasks for the ecosystem. So what we prioritize at the foundation is really high velocity governance, working on making sure that the decisions are made in a fluid way to make sure we keep the pace of development for dYdX overall, as well as enabling the DAOs and doing a lot of go-to-market activities. So the team is distributed between about 10 countries, connecting to the users and the builders of the ecosystem overall, from Japan to UK and South America.
What was the rationale behind launching V4 as a standalone app chain, moving to Cosmos in a sense?
So dYdX started in 2018 as an application sitting on Ethereum layer 1. At the time, that was the only option. So Antonio Giuliano, the founder of dYdX and really the designer of the protocol, built on Ethereum first and eventually expanded, and one of the first mover to layer 2s, with dYdX being like a very successful decentralized exchange focused exclusively on derivative contracts, which are called perpetuals. And from this kind of evolution, the team at dYdX has a reputation to really kind of reverse engineer and not being thought as tribal as some other projects might be, thinking I was born in this ecosystem, I should go on this ecosystem only, but more looking at first principle and saying, okay, we have an application, this application is growing. Today, dYdX is number one decentralized exchange for derivative. It moves between $1 to $2 billion of trading volume daily. It represents between 1 to 2% of the global derivative market. So from these kind of applications, what could be kind of feeding the growth of the applications? And if you need to upgrade to a new stack, you should be kind of agnostic and just thinking of the users, the experience, and the potential of the market you've been working on. So that's where the decision was made to essentially, instead of having your application sitting on a general purpose blockchain such as Ethereum or a layer 2, thinking on how you can, as engineers, moving to a stage that allows you to kind of control the full stack, the application, as well as the underlying blockchain, and how you can benefit from having your hands on this full stack to optimize everything for better performance of the product, faster throughput, for example, as well as improving the decentralization. Being on the layer 2 is not exactly always coming with all the performance you need, and the existing version 3 of dYdX, which still sits partially on Ethereum, as, for example, its order book sitting on AWS. So expanding to Cosmos allows to essentially control the full stack and design a full suite of software, which is kind of a Formula One for trading, as well as revamping the token economics and kind of migrating away from a dYdX token, which is a governance-only token, to a token which became, through the dYdX chain launch, utility token. So today, dYdX distributes 100% of its fees in USDCs to the stakers of the dYdX chain, and that's a very big kind of revamp and upgrade of the token economics.
Got it. So there's two elements there, right? You're improving the governance, or the governance and the utility of the token, and then on the other side of it, you're also it's enhancing the functioning or the experience maybe a trader might have on the platform. Is there something specific about perpetual swaps as an instrument that maybe make them less sort of makes Ethereum less purpose built for them?
That's a good question. Eventually, traders of perpetuals wants to get liquidity. They want to get best execution. That's why they still trade perpetuals for the most part on centralized exchanges, which are essentially off-chain entirely. Even though the assets are crypto assets, the kind of trading venue is off-chain and is the Binance, the Coinbase of the world, which are kind of centralized type of infrastructure. Perpetuals are a product which have more optionality in terms of migrations to the best technologies available in terms of blockchain, since it does not require as much composability as other DeFi use case. So let me give you an example. If you're into the lending business or into the lending DeFi business, you need to be within an ecosystem where there is a lot of assets which can come as collaterals. If you are a swap business, such as Uniswap, for example, you need to have a lot of connectivity to different chains, different layers to have assets to be swapped. In the use case of derivative, you just need a kind of a core asset as a collateral, and then you can start to express your opinion on Bitcoin, on a synthetic representation of Ethereum or some other trading pairs. So you don't have so much reliance on composability, and it gives you kind of more independence. What is very important to capture also for the audience is the size of the derivative market. Derivative markets are 10x bigger than spot. So we often refer to the daily volume of spot markets, but the same way in equities derivative are way larger than equity spot. The same patterns is kind of visible in crypto, where whenever there is one Bitcoin or one ETH being traded on spot, roughly speaking, 10 Bitcoin or 10 ETH are traded in the derivative market. So very, very, very large market, which also is kind of serving a much more institutional and kind of prosumers type of audience.
Yeah, and the reason why you have such a large derivatives market is because, I mean, it encompasses or it covers a vast array of financial instruments, from futures to swaps to non-deliverable forwards to options to a wide range of structured products. Now, if the derivatives market in DeFi were to grow, I imagine that it would also touch many of these different types of products to get to a size that would ever be larger than the underlying spot DeFi market. How do you think about, in your seat working with the dYdX community, in expanding outside of perpetuals? Will perpetuals always be the king in crypto, or will it be a different type of financial derivative?
That's a great question. If you look at the market, there is three kind of buckets of products to be traded, either spot, options, or futures. dYdX kind of crafted its position within the market, being extremely focused, building a decentralized exchange with an order book type of architectures and focusing only on one product, the Perpetuals. So usually what we've seen in the industry of DeFi overall is kind of specializations of different protocols. So usually when we speak to users, they want to improve the velocity of the order book. They want to trade more kind of long tail assets, but they're happy to stay within one category of assets, which are perps for dYdX. The way dYdX will probably expand in the future is by growing the number of trading pairs and making sure they can be traded in a safe way and getting the right liquidity around them. But also, and this is already discussed within the community of dYdX, exploring next year what we call permissionless market. So the innovation we've seen a few years ago with Uniswap, where you can launch a new market, a new spot market on Uniswap by bringing liquidity on both sides of the trade and using an AMM type of exchange. The same is coming up at dYdX for derivatives, where users will be able to launch new markets, new derivative markets. And what will be interesting is probably to see more crypto trading, derivative trading pairs coming up, but also kind of giving away the formula and the infrastructure and seeing what the market will come with. And I've heard some people thinking of creating crypto indexes, derivatives, people bringing new assets, possibly real world assets such as carbon credit, and trying to create this new market which might exist in buckets or in silos here and there, and kind of leveraging the global reach as well as the potential global liquidity of DeFi to kind of make these markets get a breath of fresh air and expand to new levels.
Understood. Can you walk us through how sort of the new dYdX enhances the trading experience? Is there something like more capital efficiency, better liquidity, more types of order types? What, like from a trading experience perspective, versus a software perspective, what does it change anything?
So the new dYdX essentially brings an upgrade of the overall software. So it prepares for the latest additional options within dYdX as an exchange, but also increase the throughput. So the order book on dYdX is essentially now decentralized. It's technically not on-chain. That will bring some latency through the block time, even though the block time is only around 1 second on the dYdX chain. But the order book is decentralized and essentially hosted within the validators. So it keeps the velocity and the similar experience to a centralized exchange, but it also gives to traders the opportunity to really look at the order book and understanding other traders. So I had conversations, for example, with hedge funds and high frequency traders, where sometimes they will go trade on centralized platforms, and it's essentially it's a kind of a black box. You will only react and build your strategies based on the market pricing and some different patterns you're able to design yourself. When you move to DeFi, you can essentially look and identifying some winning strategies or winning users without knowing exactly who they are, and trying to understand how they built and possibly reverse engineer some of those strategies. So this is something which is a unique proposition in DeFi and definitely available within the new dYdX chain. Understanding your market, understanding the participants, and also trading in a venue where there is additional throughput and the experience is definitely there and close to centralized exchanges. There is rewards which you will get also immediately after you trade. So the community of dYdX has decided to support the launch of the new chain to deploy a 20 million rewards program for traders, which are essentially distributed every time people trade within a few seconds after you trade. So it's also highly optimal in terms of capital efficiency. And you get the leverage, you get the choice of trading pairs, and also a say in the design of the product, which is not exactly what you get access to when you trade on the largest venue. So this transparency, this efficiency makes a big difference. And we've seen over the past months, people kind of reviewing a little bit their trading venue strategies. Obviously, the collapse of FTX and some others have been a kind of a wake-up call for people saying, okay, how do I plan if there is such events, and how do I manage my risk, and how do I essentially start to develop a little bit the future of my trading venues, and where I will be essentially expressing my opinion on markets. And centralized venues are not the only venues, and we see some of them being in conversations with regulators, some of them collapsing, or some of them being not as transparent, so bringing question marks. So when you're a big player, or when you're institutional, so you really want to keep exploring and essentially hedging your risk by growing your practice and experience on additional venues. So that's really helps essentially DeFi to kind of capture this kind of wake-up call with market events. But there is also probably what will be feeding the growth of DeFi and derivative in the future is the kind of legal landscape in our industry. More and more regulations are coming. More and more centralized exchanges are invited to get licenses. For the most part, they will get spot licenses, and they will need, whenever they put into action those licenses, they will need to stop their futures business essentially with customers from the jurisdiction they get the license from. So we will see more licenses, and essentially these licenses will be spot for the most part, and the futures market will essentially need to kind of expand to new venues, and that's where probably all DeFi players in derivative and dYdX, the strong candidate here, will benefit from this kind of market shift and expansion to new infrastructure.
There was definitely a wake-up call post-FTX, and this was certainly the narrative, right? That the decentralized finance world offers more transparency, maybe not as much liquidity, but remedies or ameliorates a lot of the issues that underpin the collapse of FTX, BlockFi, Genesis, et cetera. And you saw a pop in DeFi trading relative to centralized trading around I'm looking at the chart, May 2023, where the DEX to SEX spot trade volume ratio hitting 21.28%, but that's slid precipitously since then. We're right around, as of last month, 14%, which is around where it was before that pop in May. What do you think's keeping traders from going full hog DeFi?
I think it's a new infrastructure. You need to really rethink quite a few things. As you mentioned, the liquidity is not exactly there. The migration to DeFi will not happen overnight. I think we're looking at a timeline to 3, 5, maybe more than 5 years to really get everyone more familiar and kind of get their infrastructure ready for trading purely on DeFi. It's not the same thing when you trade on centralized exchanges. Essentially, you send your tokens over there and you trade. You lose custody of it, but you trade into one place. You sign contracts with a counterparty. Will this contract be respected? That's another story, and that's something you need to consider. DeFi is kind of a very, very much a new space. It's definitely growing. We've seen the growth of DeFi in the spot market. We discussed this a little bit earlier with Uniswap market shares today. There is no reasons for the derivative to not follow the same kind of trajectory. So custodians are getting kind of equipped and more ready to essentially assist their customers into trading DeFi and not only transferring assets from one venue to another, as well as the market dynamics overall. I think with higher velocity of innovation in DeFi, infrastructure evolution, regulations which will kind of probably narrow down the number of trading venues for futures, DeFi is set for derivative to be definitely a much bigger player than it is today. We see that for example with the stablecoin markets. Today dYdX is the 5th largest holder of USDCs globally, and we've seen USDCs expanding to different chains. So there is a mix for all this kind of derivative market to expand into new venues to get the right infrastructure, the right collaterals as well. And all of this is kind of falling into place step by step. So these are very, very strong signals that the journey has definitely started. The numbers are showing that there is a market fit and a demand for that, and future is bright for derivative on DeFi.
That kind of dovetails into what I was going to ask in terms of that future. To what extent, or rather, walk us through your thesis on how the regulatory headwinds the industry faces is actually a tailwind for decentralized derivatives.
It's not easy. There is different conversations in different jurisdictions. Obviously, all the eyes are on the US market, but derivative is a global market. So there is some places where there is much more clarity, some others where it's still ongoing. From many kind of lobbying efforts being done by some users of dYdX or some other bodies, we definitely see that there is an overlap between what the regulators wants to achieve in terms of compliance of their marketplaces and what DeFi intrinsically delivers. So regulators want fair markets, they want transparent markets, and all of this is by design available within DeFi. So I think it takes some time to kind of make the regulators understanding what's DeFi brings to the table, how it can be aligned with their own objective. One of the responsibility we have, I think, as industry practitioners is not only to claim DeFi is better, but also demonstrate. And this is something which has been started by many on many fronts. Should people be working on wallet infrastructures as an industry, we can see a lot of people being organized. So I'd like to insist on that. It's not about claiming, but really demonstrating and showing that fairer markets are deliverable with DeFi, transparency is deliverable with DeFi, and helping essentially regulators to capture that this is a great infrastructure. Overall, we are making progress. The digital assets kind of category was not really existent 10 years ago. We are talking in the past weeks about ETF coming. So all of this is getting through the very complex pipes of regulators all over the world. What we see is different regions progressing at different paces. But as mentioned earlier, I think with regulations also it will also kind of push some market practitioners to DeFi and make them explore and make DeFi improve also to fit with regulators.
It's interesting. So you mentioned earlier in the conversation talking with larger market participants and hedge funds about DeFi. To what extent, how far are more established players from the world of Wall Street interested or keen to dabble in DeFi? And is the biggest impediment, again, liquidity?
So liquidity is definitely at the heart. Or
is it regulatory?
Liquidity and regulatory. So what we've seen is probably some North American players taking a pause on their crypto activities over the past years, and some other part of the world kind of doubling down and taking the space left behind by some other North American players having more tension or more frictions with their own regulators and kind of reviewing their strategy. I'm personally optimistic they will come back, but overall it has gave some space for others to kind of grow and growing strong. There is a large population of market makers and crypto native traders which are very, very familiar with the asset overall. But there is also new entrants which will usually stay within the kind of mainstream trading pairs, Bitcoin, Ethereum being probably 80% of the volume on most derivative markets, and seeing that this asset is recognized as a futures ETF, probably recognized soon as a spot ETF, and there is like other venues to kind of edge or build more complex strategies between spot, between CeFi, and between DeFi. So they're definitely coming. Liquidity is there for the most part. If you look at the long tail, you might not have always the liquidity one would expect. But if you're a new entrant in the space or kind of expanding to DeFi, you will probably focus on BTC and ETH, and liquidity is definitely there. And market makers are supportive. Market makers are kind of migrating and going to serve the market which needs liquidity. So should some institutions start in CeFi, their crypto journey, and eventually start to move progressively their volumes to DeFi, there is a kind of a natural rebalance of market makers, providing the volumes needed where it's required. Coming back to the regulations and kind of the compliance habits of institutions, it's easier to sell internally if you're a crypto fund to your compliance department. I have an NDA. I'm signing some kind of contract with some kind of entity somewhere. It's kind of going faster than saying, okay, we're gonna use a public good protocol, which is a public chain. We will connect with our wallet and go and trade. Even though those public chains are actually very kind of healthy, there is obviously AML, there is all kind of analysis of the market, making sure the market is healthy, MEV is under monitoring, but not necessarily always a KYC the traditional way. So it takes time for these venues to come, but there is also some kind of new solutions designed by custodians, for example, where custodians allow people to start trading in DeFi in a kind of a more institutional way, some kind of middle office or middleware, helping people to distribute their large orders or their derivative contracts between CeFi and DeFi. So all of this is evolving in the right directions, and I think the numbers and the growth of DeFi in general, and specifically on crypto derivative, is just showing that people are getting more comfortable, and the volumes are definitely growing on a weekly basis.
Shifting back, I guess, to dYdX more specifically, are there any upcoming milestones or developments that you are particularly excited about?
I'm very excited about essentially the permissionless market coming up next year. This is exactly what we've seen in terms of innovation from Uniswap, and I'm very excited to see how the market will express itself and what kind of markets they will want to trade. More shitcoins will come probably. That's a given. People want to trade more assets, and they will have this opportunity to trade much more assets within a risk and liquidity framework, which is defined by the DAOs of the dYdX ecosystem. But also possibly some new assets such as indexes which are hard to build or crypto native or hard to build in the traditional world, carbon credits, and why not starting to leverage some kind of new innovative products where risk could be hedged in a kind of automated way, allowing more access to, for example, a derivative market for insurance market. Being able to create, why not, a derivative, a contract on weather forecast, and maybe a new birth of the of the prediction market. Prediction market have been coming in our space up and down. That was always something of interest, but never really took off. And maybe this prediction market represents the long tail of perpetuals derivative, where you could have some kind of betting contract on maybe presidential elections or soccer games or you name it. And that's maybe a time for prediction market to pop up and essentially bring a new herd of new users to the derivative market, where they will not come for expressing a long view on a specific asset, but more thinking on how they express an opinion on a potential outcome of a real world event. And how UX and UI could be redesigned and rethink, moving away from the green and red candles and thinking of a better user interface and more inviting for a larger audience.
Well said.
That's the beauty of building decentralized finance. Is all this infrastructure is open source. Sometimes you give away the recipe and you see a little bit what the chef will be building. Absolutely.
Well, thank you so much for joining the program. Where can people learn more and follow you and follow along what's happening at dYdX Foundation?
Absolutely. So follow us on dYdX Foundation Twitter account at dYdX Foundation. This is the best way for you to start your journey within the dYdX chain, starting to consider staking or using the protocol.
Perfect. Thank you so much.
Thanks for having me.
And the Scoop will be back with you again with another great guest. Have an awesome day.